Good morning, everyone. Oh, it is a hot one today. Woohoo! I went for a power walk this morning through the woods. Get the heart going and all that. Running, it's just like, it's too early to run. A power walk was good enough, and it is hot. I feel like I should have like some maracas and a steel band going behind me and drinking cocktails at 10 a.m. That's that kind of hot. Anyway, what we are going to be doing today is talking all about tax, accountancy, and the basics, how to do your self-assessment with the wonderful Natalie from Theataccounts. So I'm going to bring her in now. Hello, how are you doing?
Good morning, James. I'm well. How are you?
Good. It is hot. Where are you?
I'm in the office in Worcestershire, so it's quite warm and muggy today, isn't it? So I know it's just crazy hot. Like you say, I'm surprised you've done a power walk this morning, James. That's very good.
I did a power walk. I've put this t-shirt on to sort of neutralise, but below it's just like I'm covered in mud and brambles, and yeah, it's crazy. But I was
That's a great thing now, isn't it? Being able to just wear what we like. You just need to dress the top half, and then
yeah, I feel like a 1990s newsreader where they used to wear like flip-flops and slippers and shorts, but they're tied. Brilliant. So tell us a bit about today. So it's self-assessments and the importance of knowing what to do at the start of your career or for your career. Talk us through what you're talking about today.
Yeah, so today the purpose is for me to give people an insight into what it means to be self-employed and what's required of you as a self-employed individual. So I'll be talking about the real basics of what is a tax return, what it means to be self-employed, and just hopefully the purpose, what I'm trying to achieve is to give people a bit of confidence in that self-employed journey at the very beginning, and ultimately that tax return, even if you do choose to appoint an accountant at some point, is that person's responsibility. So even if you do have an accountant on board, it is ultimately your responsibility, and it's good to have an understanding of what you're actually doing and submitting to HMRC. So hopefully we can gain a little bit more confidence, and I can talk you through the real basics of tax and what's required.
Wonderful, fantastic. Tell us a little bit about Theataccounts for people that are first time tuning in. Tell us who you are.
So we are industry leading entertainment accountants. So we've been set up specifically for the entertainment industry because it is different. And we can therefore tailor our accountancy services more specifically for the industry. We have been set up, I think, for around 8 years now. Alex, our owner, got involved. He noticed, seen a niche in the market. He's an accountant and he's been an accountant for about 20 years. Noticed there was this missing niche to support the entertainment industry, and then Theataccounts was created, and it's just grown, James, from strength to strength. We just try and really support our clients, give them the best possible service that we can, but also be competitive on pricing as well, because it is scary. Tax is scary. Tax return. You mentioned HMRC, everyone panics. Oh my God, tax, I've got to do it right. And it is a bit of a scary thing. And then you get the opposite effect, actually. Sometimes people bury their head in the sand slightly when it comes to tax because they don't understand it and they don't really know what they're doing. So you get the opposite effect, really. But yeah, it's a great company to work for. We're doing well.
I think what's really important is that that you do is that specializing in this area, because like you say, it is different. Like if you have a building firm, there are certain ways that the tax will be done and what you can and can't write off due to tax, and if you're a business and what you're able to claim, what you're not able to, and that will be different for our industry. Absolutely.
It's not the norm, is it? Normally you would prepare a set of accounts and you would never think of putting through makeup or
Right.
you know, that sort of thing, closing. That's not the norm. And as accountants, we're trained to be a certain way, and expenses are only allowable, you know, of the norm. But entertainment industry isn't the norm, and that's where we can pass on the expertise, really. And I can today hopefully give you a little bit more insight into expenses. I think that's quite a grey area in this industry, isn't it? What can I claim, what can't I claim? So I'm going to cover that quite a bit in today's slides.
Well, I think it's time for me to go, so I'm going to leave you.
You can stay and listen to this.
I know. I'm going to be taking notes. Brilliant. Well, I will see you in, it's an hour and a half session, everyone. If you have subscribed to our YouTube channel, you can write in the live comments. Natalie won't be able to see your questions when the slides are up, when she's screen sharing, but she will come to those questions towards the end. So write as you go. Don't save them up for the end. Write them as you go, because then when Natalie comes out of the screen, she can see those questions and answer them. And also it saves you forgetting, you know, if you have an important question, you might forget it because there'll be a lot to cover, and there's a lot of information. So I will love and leave you, and I'll see you in around an hour and 15. Have a great session.
Thanks, James. Right then, everybody. As James says, I'm here today just to talk to you about what it means to be self-employed. Alex did a session last week and he covered COVID, and that's such a huge topic for everybody at the moment. But my session today is to go back, as I've said a few times now, back to the basics, to talk you through what it means to be self-employed. And I really, really hope that you feel, once you've watched this presentation, this webinar, that you feel you've invested your time wisely and you actually come away with a little bit more confidence and understanding of how tax works and the whole tax return and what's required of you being self-employed. So I'm going to go into the slides now. As I put them up on the screen, all I will be able to see is the slide. So you'll hear me, you'll see me, and you'll see these slides. However, I won't be able to see any comments or questions. So please, as James said, you can put your questions in as you go. We go through the slides, and then I'll open it up to questions at the end and be able to answer those for you. So add them in as we go. As I say, I can't answer them until the very end. So I'm going to share my screen with you now with our slides. So just bear with me a second. These together. Okay, so we are Theataccounts, and as I say, we're here today to cover the basics of tax. Little disclaimer there, just important to add there, just because we are live on YouTube, and things with accountancy and tax, the thing is, things change all the time. So obviously the information we've put on these slides at the moment are true, but going forward things do alter and change. So that's just a small disclaimer there for that. So we've talked a little bit about Theataccounts. So I'll talk a little bit about who am I. So I started my journey in accountancy when I was 18. So I had done A-levels at school. I was due to go to university to do nursing in Southampton in the September. So I'd finished, done my A-levels, was going to be a nurse, going to university. And in that summer, I met my now husband. So I did not want to leave. I did not want to go to Southampton, and I thought, no, I'm in love. I'm staying. That's it. Not happening. So as you can imagine, my parents weren't very happy, and you know, you cannot throw away, you know, your university. I would have been the first. I'm the oldest of 4 girls. I'd have been the first in the family to go off to university, and they were saying, no, you are going. So as an 18-year-old, stubborn, you know, definitely sure that I was in love, that's never going to happen. And so my mum said to me, get yourself a proper job. if you're going to stay, you get yourself a proper job. So looking through paper, and there was a job for a training accountant. And I thought, well, that sounds like a proper job. I'll apply for that. So that's how I started my journey in accountancy. Never, when I was at school, did I think this would be my career, but that's life, isn't it? Things change, your journey through life alters, and obviously that was mine. So I started at a practice and studied whilst working, and then I left to teach accountancy and tax for a short time in Birmingham, which is why I enjoy doing these sorts of things. Really enjoy talking to people, delivering these sorts of tax talks, and yeah, I just did that for a few years, and then I sort of left then I did leave to go on maternity leave. And I've got 3 children now, so I then realised coming back to work with children, it was better to sort of get back into practice. And Alex, who is the owner of Theataccounts, he sort of said to me, come on Nat, we've got this new company set up, Theataccounts, it's great, come and join me. And I've been part of it now. And we are, as it says there, we our ethos is to make tax simple, and we pride ourselves, and that's why we go out of our way to do things like this, to teach people, to offer as much support as possible to everybody out there, because we feel and we pride ourselves on being friendly and approachable. So because we are specialised in the entertainment industry, we have a broad knowledge, therefore, of the industry that we can pass on to our clients. And that really does help. And that's probably what sets us apart, really, is that we are here for our clients, but also we've got that knowledge in the industry because it's different. As we were saying earlier, it isn't the same. Expenses especially, it's a very different area, and perhaps not the norm when it comes to claiming for expenses. So that just talks a little bit on this slide about who we are and what we do. We offer a range of services to people: tax returns, obviously self-employed accounts. We will set you up to be self-employed. If you're just starting your self-employed journey and you're not yet even registered with HMRC, we can do that for you. We deal with new company limited setups, if that's something you choose to do, or you get to a point in your income where actually, is it more beneficial for me now to be a limited company? We can guide you through that. We have another talk in a few weeks that will sort of focus more on if you are at that point where you've been self-employed now for a number of years, your income's at a certain level. You may have heard, am I better off being limited? What does that mean? Then do sort of tune into our session that we've got in a few weeks regarding that. We also do VAT returns as well. So if you are at a point where you reach the VAT threshold on your income, you are required then to be VAT registered individual or a company. So we can obviously deal with that. We obviously deal with payroll, and seafarers is quite a common area now, especially again in this industry, people that are on cruise ships. And again, that's where our knowledge comes in, really. We can help you with that seafarers potential tax relief, which is quite a specialist criteria to meet to be able to get that tax relief, but obviously we can help there. So just to sum us up then, so we as accountants, this is who we are. That's why I'm here delivering this tax talk to you, really. But overall, we try not to be just once a year accountants. You've probably seen a lot of us. We've got a good sort of following on Twitter and that sort of thing now, that we try and help our clients throughout the year. And there's no question too big or small. We'll always just try and help as much as we possibly can, really. The next slide is just who our clients are, really. So we've got some fantastic clients, and it really does make my job and all our team, we've got a great big team now in Theataccounts, that bit more interesting, really. It's great to pick up the phone and talk to our clients, and you know, they're involved in Phantom of the Opera, they're on the television. It's fantastic, and that makes our jobs even more interesting, and a bit more exciting, I suppose. So our clients are great, and we've got a great vast array of different clients now in all parts of the industry. So as it says there, we've got actors, performers, singers, dancers. So if you are beginning your self-employed journey and you're any one of these, you know, we can still help you. Models, magicians, comedians, all of those different roles, really. We've got a real good diverse range of clients in a variety of jobs, so it isn't just actors that we look after, really. Okay, so that's enough about theatre accounts and who I am. We're going to go on now into talking about the tax return. So once you are a self-employed individual, so you're starting your self-employed journey, once you have that first job lined up and you begin that job, you are then required to be registered with HMRC as a self-employed individual. And you can do that online. It's a relatively simple process to do. You go onto the Gov website, and you can fill in a form. It takes all of 5 minutes, and you fill in all your details and you register as a self-employed individual. So you are starting your business now and you're now self-employed. As soon as you do that and you inform HMRC that you are now a self-employed individual, you will be required every year to complete a tax return. What is a tax return? Well, a tax return is there to show and to work out how much you have earned and how much tax you need to pay on that earnings. It's not just tax that you pay, you'll be paying national insurance as well. Being a self-employed individual, you will pay class 2 national insurance and you will pay class 4 national insurance. And you might even use that tax return as well to work out if you have student loans to pay back. So there's various things that this tax return does. But it will be submitted to you by HMRC once that year has passed. So here in the UK, our tax year runs, it starts on the 6th of April and it finishes on the 5th of April. So those are our tax years. So we will talk here about the 1920 tax year, the 1819 tax year, and that's where the tax year runs. It starts on the 6th of April and it finishes on the 5th of April. If you become self-employed in May 2019, then you fall within the 1920 tax year. So you will need to do a tax return for the 1920 tax year. That will need to be submitted to HMRC by the following January. So as you can see out there on the slides on the left, we've got here the tax year for 2020. It started on the 6th of April 2019. It finished on the 5th of April 2020. And we will need, or you will need, it's your duty, even if you're appointed an accountant, it's your responsibility to make sure that that tax return is submitted to HMRC by the 31st of January. If you don't, there'll be penalties, there'll be fines, there'll be interest. It's something you don't want to do. You need to abide by these rules and get them in by the 31st of January. If you think about it, it's quite generous, isn't it, really? So, copy. You finish that tax year on the 5th of April, and you've got all that period of time then, from that point up until January the following year, to be able to submit that tax return. So there's plenty of time, and there's still so many clients that leave it until January. And there really isn't, you know, it just makes our lives so much harder when we're sort of bombarded with tax returns in January. And I think probably the main reason for that is you think, well, if it's not due till January, I'll do it in January. But actually, you can submit it as any time once that tax year has passed, but you don't need to pay it. So if there is tax that's due, you still don't need to pay that till January. So a tax return is used, as it says here, to by HMRC to calculate how much tax you are due to pay to HMRC based on your earnings. Or sometimes it could be that you are due a tax refund. Well, how can I be due a tax refund? It could well be that as you start your self-employed journey, and really common in the industry because it's so up and down, that a lot of clients that I know will start also their self-employed journey alongside a PAYE job as well. So they might work weekends somewhere else, perhaps a coffee shop. They might work Monday to Friday in an office and then only do their self-employed work at the weekend until it picks up. So that's quite common to have both self-employed income and PAYE income. What do I mean by PAYE income? That's income you'll earn as an employed person. So you are already employed and you are paying any tax potentially at source. So when I get paid every month from Theataccounts, I get my pay slip, but I've already been paid my tax and my national insurance. It's been done for me. It's been done by Theataccounts as they process that payroll every month. So I am called what's taxed at source. I pay my tax as I go, and that's what happens when you are employed. You do that. Obviously, as a self-employed person, you aren't paying any tax straight away. You are doing it at a later date, and that's the purpose of the tax return here, is to work out what you pay. Going back to what I was saying about potentially having a PAYE job as well on the side, it could be if you do work potentially an admin job, let's say Monday to Friday, that you have utilised perhaps your personal allowance in that income, but you've also paid potentially some tax as well. So there could be lots of different scenarios. It could also be that you work there and you've just been taxed straight away and you actually have paid too much tax. When we do your tax return, it works out that actually you've paid too much tax at source and therefore you would be due a refund. So it can work both ways, is the purpose of what I'm trying to say, really. So you know that if you're a self-employed individual that you need to register now with HMRC as soon as you get that first job. As soon as you start that self-employed journey, you need to be registered with them. Whenever that point is and whatever tax year that falls into, you will then need to submit a tax return for that year. So you've done that. What HMRC will do is issue you your unique tax reference number. Once you're a self-employed individual with them, they will issue you your UTR number, your unique tax reference number. That's just as important as your national insurance number, and that's personal to you. So you will be issued that and you will use that number like your national insurance number throughout your self-employed journey. So once you get to that point where you want to complete a tax return, or you need to complete a tax return, should I say, here's on the slide on the left here, just a list here of the basic information you're going to need to be able to complete that tax return. So firstly, what have you earned? What has been your income? And let's say you did start your self-employment journey in May 2019, and you, as I've said, you needed to have done a 1920 tax return. So we're sitting here now, we need to do that tax return. What income have you received from May 2019 up until the 5th of April 2020? And that's the income that you would need. You need to gather that information, keep that information, and record that information on your tax return. You will need your self-employed expenses. So in order for you to go out and do your job, whatever that might be, as an actor, as a model, whatever you might do, you would have incurred expenses to be able to do that job. And that's why we'll talk about that in a second, how important record keeping is. but you also need to keep those and record those, because ultimately you pay tax to the taxman on your profits. Okay, you don't pay it on your income. So it's important to keep hold of all of those expenses that you have incurred to be able to do your job, and that's also going to be an important part of completing your tax return. If you work alongside, as I've talked about, you will need your PAYE details, and that's usually in the form of a P60 that's issued to you at the end of a tax year, and that will just summarise your earnings in that tax year with that employer. If you have various employments, you'll get various P60s from them. Bank interest received, if you receive bank interest, that would need to go on there. And obviously, once you are submitting that tax return, you need to put in there your national insurance number and that really important new number that you've now got as a self-employed individual, your UTR, your unique tax reference number. So that's what the tax return is. Talked about the dates of when submission is. You know, as I've said, you don't need to wait till the 31st of January. You can submit at any point once that tax year is finished, but you still don't need to pay if there's tax due until the 31st of January. If you do it earlier and you get a refund, you will get that earlier. Record keeping then. So this bit is, you know, you're all excited, you're starting your self-employed journey now, it's difficult. My husband runs a business as well, and you get so wrapped up in just advertising and pushing that business, but it's just as important to keep the record keeping side as well. So this part here is just saying all self-employed workers must keep records to prove their details of their income and expenses, and that is a HMRC requirement, that you must keep your records that you are potentially putting on this tax return each year for a minimum of 6 years. After that, you can do what you like with them, but for 6 years you must keep those records, because at any point HMRC could get in touch with you and ask you to supply some supporting evidence, the supporting documents that have been inputted into any of those tax returns through that 6-year period. So it's really important to keep your records safe and well organised, I suppose. Most common records here, we've got some sales invoices, obviously your expenses. As a self-employed individual, you can run your business through your personal account, so you will need your bank statements as well, and a lot of clients do that. They'll just provide us with their bank statements as well to be able to prepare their tax return. Some clients set up Monzo cards, and they transfer money into that, and then all of their business expenses will go out of their Monzo account. That's quite a useful idea if that helps you. Things are adapting now, so when we talk about records, they can be in the form of a physical receipt, but they can also, or obviously on your bank statements as well. But as I say, things are changing now. You know, if you go to Argos, you get offered a e-receipt instead, which is much easier, as long as you have that copy or a physical receipt, or as I say, a photo, an email receipt, then that's fine as well. There's lots of apps out there now that help you with this. You can take a photo on your phone and at least you've got that record there, so that's absolutely fine as well. Another piece of advice, as I say, you know, the more that you are keeping those receipts, the more expenses that ultimately you've got, and therefore it's going to bring down that profit figure, and you don't want to be paying more tax than you need to pay. Nobody wants to pay any more tax than they need to pay, but it's really important that you keep those receipts. So it just says there, you know, start perhaps as you mean to go on. You could start summarising your receipts into categories straight away. So you could have some envelopes with travel on, with, I don't know, let's say stationery, with advertising, all your different main categories that your expenses, and you could have those envelopes, let's say, in the back of your wardrobe, And as you purchase anything, if you go and buy fuel, if you have travelled to London on the train, your train ticket, anything like that, as soon as you've got it, if you are putting them into those envelopes that you've created straight away, you're ultimately doing your bookkeeping as you go along. Then it'll just make your life so much easier at the very end. And you know, the beauty, I suppose, of having an accountant, if you do choose to have an accountant, but at the very beginning, an accountant is an additional expense. It could be something that you just can't justify at the beginning. So you do need to be more responsible for preparing your tax returns at the beginning. You know, if you do appoint an accountant, you could just chuck all your invoices and receipts to us, and we would do that bit for you. But the purpose here is to try and get you to be more organised and say, well, actually, if you're going to do your own, make your job easier at the end and categorise them straight away into those main headings. And that's really good advice, and you'll thank me for it if you do later on do your own tax return and you've already got those in those envelopes. You can just pull those out and then summarise those in each category then. So that's just sort of how important record keeping is. Touched on what a tax return is, we've touched on those key dates there, we've touched on what a tax return is, the purpose of it, what's required from you from HMRC, and a little bit of advice there about how important record keeping is, how long you need to keep, the duration of time you need to keep those records, and a bit of advice about categorising. So that's probably it on that slide. So let's go on to the next one. I talked about this already, really, but there's no harm. I think, you know, I spoke to James just before coming on here, and you know, Alex conducted our last session 2 weeks ago, and he spoke to Rosie, and I think it's quite easy for us, and you will know this in your profession, that we do this every day. So we talk, we know what a tax return is. So it's quite easy for us to assume everybody knows something or has a clearer understanding than they possibly do. So a good sort of what I'm trying to achieve here is to just sort of break that down, slow it down, and really go through those basics again. So I'm probably going to repeat myself a little bit here, but hopefully that'll just cement what I'm trying to tell you if you are brand new to this, to the world of self-employment. So as I said, as soon as you start your self-employed work, you must register as a self-employed individual, okay? And you'll need to register with HMRC, which you can do online, and therefore you need to make sure that you are paying the right tax as a self-employed individual. Once you have done that process and you are registered, you'll be given that UTR number. I wonder how many times I'll say UTR on this webinar today. Keep your receipts. Again, as I say, this just says how important it is managing your tax for actors, and anyone that's self-employed, you will need to keep a record of your expenses that you can claim against your tax. So anything that you purchase that is helping you do your work, that's meaning that you can get that income, is going to be an expense. And it just says there, so training, headshots, costumes, agent fees. If you haven't appointed an agent, they will take some of that from you, and that's an additional expense that you will need to summarise. Professional subscriptions, you're all going to probably have those. So keeping your receipts, again, as I said, is vital, really important. And if you are going to do this yourself, it will help you in the long run if you start as you mean to go on. Again, I've talked about this already, but you know, you don't need to leave it till the last minute. Although you have up to midnight on the 31st of January every single year to submit your tax return and to pay any tax you owe at that point, you can do it earlier, as I've said. And it just will put you in a better position to understand how much tax you've got to pay. You know, I've had it a lot with clients that you speak to in January, and you know, as I say, some clients put it off. It's something they're just too busy or to deal with. And then come January, we prepare the tax return for them. And then there's a bit of a shock because it's more potentially than they anticipated. And there is no time then. If we're doing your tax return, or you are doing your tax return in January, and there is more tax to pay than you thought, then it's not giving you much time to get that income together, and it is more difficult. As I say, as an employed person through Theataccounts, I pay my tax and national insurance at source. So what's left is for me to do what I like with. That's my income. I don't need to worry then. I've paid tax, but for you guys, you're getting it at that point, and you should be keeping it aside, because essentially some of that isn't your money, that's the tax man's. And it's hard, that money's in your bank and you kind of, you know, you buy this or you buy that, and it is, as much as, you know, you could try and budget, it is a difficult situation. So the earlier that you do your tax return and you understand your tax position, that again, that's going to be better for you. Another thing that I will mention is something called payments on account. Now that is something I could talk about for quite a while, really, but just to sum it up, it basically is advanced payments towards your next tax bill. So when your tax in any tax year, the amount of tax and class 4 NI exceeds more than £1,000, something called payments on account kick in. And what that is, and we've got some slides, and the next presentation is really great. We'll go through all of this in lots more detail in a couple of weeks, and we will actually show those tax calculations and how the figures have all come together. And there's some great ones, as I say, about payments on account on there to really cement that and understand how payments on account work. But just to sort of introduce you to it in the simplest format, I suppose, it's just payments towards your next tax bill. And if your tax in this particular tax year that you are doing exceeds more than £1,000, HMRC will require you to pay some of next year's tax bill at that point. So in January, you could pay your balancing payment on any tax, or your tax that's due for your tax year. Let's say that's £1,000. Let's say it's £1,500, let's say. So you've got that to pay, but then you've also got 50% of next year's to pay at January. So your tax bill's then now gone up again by 750 quid. So you've got that plus your next payment on account. So that's a big shock to some people. It's amazing how many clients, you imagine by the time I've done their tax return, they've been self-employed for more than 12 months, 18 months, you know, and they didn't know anything about payments on account. So not only have they thought, okay, I've budgeted, I think that's what my tax bill is going to be, I then throw in, well, actually, you need to pay 50% of next year's tax bill now, and also you need to pay the rest 50% in July. So you may have heard of that, where people say, I've got a tax bill to pay in July, and that's that second payment on account. It always hits people more in the first year, obviously, but the point of it is that as you then continue through, when you do and prepare your tax return next year, you've already made 2 payments towards that tax bill. You may have paid too much, you may have paid too little. So there'll be a balancing payment to make if you've paid not enough. If you paid too much, you'll get that money back. But just be wary of that in your first year if you're going to sort of earn money where that's going to kick in. So it's a good idea to tune into our next session if you want to understand a little bit about that. But again, it's just a good idea, another reason to get your tax return done sooner rather than later. Pre-trade expenses. So this one, you know, you are beginning your self-employed journey, and to be able to be self-employed, that will take some time to build up to that point. So you might purchase equipment, you're going to be preparing, you might be setting up a website. So you are going to incur costs before you've even taken any money or even lined up any work yet. And this is in your first year. So this is what it's talking about here. So some expenses that you have incurred relating to your work prior to your trade commencing can be claimed on your first tax return. So certain expenses can be claimed back and backdated. Just as important, if you are doing that, if you're purchasing a laptop, you're purchasing equipment, if you are going out and buying things, as I've said, keep those receipts. They're really, really important. And that just gives you a little bit of examples there of such equipment that you might be buying or incurring. You might be traveling to 4, 5, 6 auditions before you ever get any work. So those sorts of costs you can keep, and we can look at putting those in, and you can look at putting those into your first tax return. So just a point there, a useful point to make. Examples of income that may or need to be declared on your tax return are listed below. So it's not just, as I've said, just because you're now a self-employed individual, does the tax return only include your self-employed income. You will need to declare all of your income into that tax return. That's the purpose of it, really. So it's got here a sort of rough list here of income that we would typically see in a tax return. So self-employment, so your self-employed income, perhaps you're part of a partnership as well, so you've got some profits that need to go from that partnership tax return into this. PAYE, if you're working, as I've said, alongside your job, that's something that you're going to have as well. You might potentially have some rental income as well, that would need to go in there. You might have dividends, and dividends are through a limited company. So if you own and you are part of a limited company, perhaps as well as, limited companies will pay in the form of dividends. So that's your share of profit. And they would also need to obviously be included within a tax return if you had that source of income, and any pension received there. There is sort of some benefits as well that would need to go into that tax return. Some are exempt, but there is a few that also might need to be included on your tax return as income. Okay, so summarize that again then, this slide. What have I talked about? What am I telling you? We're saying, when do I need to register to be self-employed? You need to do that at the very start of your journey. Said it a few times now, keep those receipts, really, really important. Even those receipts that you are incurring before you've started earning any money, keep those. Don't leave it till last minute. I've mentioned payments on account to you. I've introduced that to you. Some of you may have heard of it, some of you may not. I've introduced that to you. So don't assume you might know what your tax bill is. The sooner that you do your tax return, the more time you've got to prepare for any tax bill. Because if you don't pay on time, there's going to be interest charged on that, and charges. You just don't want to pay any more than you need to pay. And then we've talked about what sort of income we were going to see on that tax return. You're not just going to put self-employed income in there. You're going to put all of your income that you've incurred through that tax year still on that tax return. Okay, let's go on to the next one. Here we go. So what expenses can I claim on my tax return? This is probably now the one of a question I hear probably a few times a week, really, and that's what makes this industry a bit different. You know, it's not the norm. Okay, you'll see there we've put a list on this slide, a brief list of the types of expenditure that we would typically see within this industry, and it is different, if you like, to normal. And as it says there, one of the most confusing areas when you're self-employed is working out what expenses you can claim on your tax return. And as I say, I have a phone calls all the time with people saying, I've just bought this and can I claim it? I'm going to buy a bike, can I claim that? You know, so there's lots of different, you know, it's a bit of a grey area, and it's not quite as simple sometimes to work out. And if you are doing your own tax return, I would probably bet this is the bit that's going to give you the biggest headache. This is the bit you're going to worry about the most. Oh, am I claiming enough? Am I claiming? Am I claiming too much? You know, that's going to be the area that you probably will struggle with the most. So, we talk about using your common sense when it comes to claiming expenses, and we think about what is reasonable really. So HMRC state that when deciding if an expense is deductible or not for tax purposes, it is important to consider if the expenditure was incurred wholly and exclusively for the purpose of your trade or profession. They're the easy ones, really. So agent fees, you know, that is an expense that is wholly and exclusively to do with doing what you do. You wouldn't have even got that work if it wasn't for your agent. So when it comes to expenses, those sorts of direct costs that are really, yeah, I can definitely say those are wholly and exclusively to do with my job. So those are easier, if you like. HMRC also recognised that some expenditure has a duality of purpose, which it says here on the slide. And I'm going to talk about that in more detail because that's not quite as easy. And they're the headaches. They're the ones where I go, okay, well, I've took on a new role and, you know, I've decided I wanted my teeth whitening, and can I claim all that back? You know, those are the sorts of things that are going to give you the I'm not sure. So it's those duality of purpose ones. And I'll say the next slide, we can look in more detail. So this is expenditure that's incurred for more than one reason, such as business and personal. So great example of a expense which has that dual purpose, a duality of purpose. It's both business and personal, is your mobile phone bill. So that you use it both for business, but you also use that for personal use. So you need to extract from that cost the business proportion, the business element, to be able to claim that. And that's the bit that might be a bit confusing. So you would need to look at that, think about what I've said about what is reasonable, and think what I've said about using common sense. So if your phone bill is, let's say, £100 a month, how much of that would be reasonable? How much of that is relating to your business? And that's what only perhaps you can answer, really. How much of that cost is definitely the business side of things? And you can look at that in a bit more detail. I mean, myself, you know, your phone's always with you now. You know, I use it all the time. My emails come directly to it for work. You know, if I was self-employed, then and I needed to do a breakdown of my phone, so I'm using it for emails. I'm using it, you know, to look at things, and especially at the moment, you know, through COVID and things are changing all the time, and we all have been here at Theataccounts. We've all been working crazy behind the scenes, trying to keep up with all the changes that have happened through COVID and all the grants and you know, the self-employed schemes, the furloughing. We're doing all our research. So you know, I'm constantly on my phone. I'm researching to see what's coming up. But I'm also using my phone to talk to my family, my friends. But I will use my phone to talk to family and friends more so through WhatsApp. And WhatsApp is actually free. And you know, I'll ring my husband, and actually, because he's on EE as well, that's a free call anyway. So actually, the proportion I'm using my phone for business is probably less. And it's actually like the free part of it, if you like. You know, I'll use my phone to go on the internet to distract my little girl. She's 2 in July, and you know, going shopping's a bit of a nightmare. And very often I'm pulling my phone out and I'm YouTubing Peppa Pig just to try and keep her happy. So what I'm saying is, although I use my phone quite a lot for personal use, the element and the cost side of it are probably the free bits, really. So I might put more of that cost through for business than I would. It wouldn't just be a straight 50-50 swap. So think about it in a bit more detail is what I'm saying here. We'll talk about it a little bit more detail on the next slide. So I'll go on really to this list then. What can you can claim vary, depends on what type of work, but there you go, you've got your brief list there of what we would typically see on your tax return. We've got a great blog on our Theataccounts website as well. If you want to, after this or at any point, you know, you don't have to be a client, have a look at that. And that gives you this basically and a bit more detail. And that's always a really good guide for you to be able to see. And it might just trigger an expense that you may not have thought of, or that you thought you might be able to claim. So, you know, it's quite useful. And as I say, do have a look later if you wanted to do on our website for that. But, you know, agent fees, you were going to see, they're wholly and exclusively expenses that you've incurred to be able to do your work. And you can claim those in full. Even if there's a VAT element, and if you're not, some people have asked me that, you know, my agent's charging me VAT, I'm not VAT registered, what happens with that? But it's just another expense, it's just part of the expense, so you would add that to it. You know, travel, if you're traveling to auditions, you know, that to be able to get that work, you've traveled. And you've incurred a cost there. We're going to see typically those. Accommodation, you know, if you are working away, again, very common in this industry. We've got costumes. If you specifically bought a costume because the requirements of your audition have stated that, then that's a cost that you've had to incur to be able to do that audition. You're going to see those. Again, any laundry, clean of costume props, if that's your area of work. Postage, we don't see very much postage anymore, do we? But, you know, again, if there's postage and stationery, you're purchasing a computer equipment. I talked earlier a little bit about when you are preparing to be self-employed, if you go and buy a laptop in preparation to be self-employed, sometimes most people do still have laptops, you know, that you might use your laptop that you bought 4 years ago and you don't have that receipt anymore. You could potentially look at putting that in at its market value instead. Back to this list though, you know, bank charges, if you are being charged bank charges, more probably on an unlimited company really, but bank charges there, telephone costs, your internet costs, you know, that's going to have that duality of purpose, isn't it? That telephone, as I talked about, and so is internet. That's another one that's split. You use your internet at home, but you also use it for personal and for business. It's got that dual purpose, and that's when you need to extract from that what's personal and what's the business element of it, and that's where things get a bit tricky. If you choose to think, oh my God, she's not helped me at all in this tax talk, she's just scared me to death, I definitely do not want to do my tax return, and you do want to appoint an accountant, any fees that you pay to an accountant to prepare your tax return is obviously an allowable expense in its entirety, and you can put that through. Professional subscriptions, again, those can go through in their entirety. You advertise your business, those are typical, along with website costs that you're going to have. Show reels, so you've prepared a short videotape to show examples of your work, that's fine, that's going to go in. You potentially have paid a professional photographer that you're going to pass on to a casting director for your next role. Those are typical headshot costs that we expect to see. Those can go through. Hair and beauty, difficult one. Again, if it's for an audition, it's a particular cost. Yeah, yes, you could argue that's allowable, but it's just using, again, your common sense here. There's some examples in a bit we'll talk about that might just sort of cement that and understanding of how this works a little bit more detail. Research, if you're going out and you're researching your industry or your competitors, that sort of thing, so perhaps you're going to the theatre, those sort of things, then you might be able to claim some of that cost back. Another one that I'm going to talk about in a bit more detail shortly is use of home as office. So you don't, if somebody was to go out and hire a purpose-built a purpose-built office every month, and they're paying £500 for that purpose office, that's a business expense. But you might choose not to do that, and you choose to do your work from home. So your sort of bookkeeping from home, all of your sort of, enabling you to get your work, you're going to do that, and you're using your home as office. So that is an expense, and as I say, we'll talk about that in a more detail. So to summarize this slide, then, we have introduced to you that expenses is a grey area. You need to use your common sense. It depends very much on what you do and your type of work to what expenses we would say, but this is typical expenses within this industry. Some expenses will be wholly and exclusively for business use, for the purpose you've incurred that expense for the purposes of your trade or profession. Others, where it gets a bit more difficult, will have that duality of purpose, and that's a bit more strict. But HMRC do recognise that some expenses have that, and we're going to talk about that on the next slide in a bit more detail. So, as I say, those bottom are what we typically see, and if you did want to look at those in a bit more detail, check out our website for those. Okay, let me just check the time. How are we doing for time? Oh my God, I can talk, can't I? Right, let's go on to duality of purpose then. So I have said to you then that the ones that are wholly and exclusive are easy when it comes to expenses, but there's also obviously some where they've got that dual purpose. And what is this slide telling you is that the rule is that where an identifiable proportion of the expense is wholly and exclusively for the business, you can claim that proportion as an allowable expense against your income. But the important point to mention here is that you must be able to identify that business proportion. If you can't, and it's not that clear, then actually HMRC will say, well, you can't claim any of it. So bear that in mind. They're quite strict on that. If it's not clear and it's not easy to be able to extract the difference between between your business and the personal bit, then actually you probably shouldn't put anything through. And that's what that's saying here. Let's just run through these examples then. So Matthew has one telephone line in his house. He works from home. He uses the phone to make and receive business and private calls. Here, there is an identifiable business element. So we know that he's using that to make business calls. Matthew can look at that itemized phone bill and he can see exactly which costs were business calls. Okay, so he can, as I said, he can look at that bill and he can identify from that bill what phone calls he was making for business and which ones he wasn't. Okay, so that's when we're saying, no, we can identify here the difference. We can see which proportion of this is wholly and exclusively for business. So that's what that bit's saying there, that because he can, the proportion we will claim is the ratio of business calls to private calls. And then it just says, in practice, it may be sufficient to make a detailed record for, say, a couple of months and then take this proportion of the bill for the whole year. So it might not be practical for you to do that every single month, to go through, especially if you make loads of phone calls, to go through. That would be a huge task. So what that's saying is that if you were to be able to say do it for a few months, let's say January, you worked out, you've itemized your phone bill and you've worked out that actually the wholly and exclusively business bit is, let's say, £30. Then you did it for February and you did exactly the same thing, and the business element was, say, £40 in that month. You could say, well, actually, it's an average of £35 a month. I'm just going to claim that, therefore, going forward. But just be wary of that. If that changes, if your business fluctuates, you know, at the moment, people aren't working, so you wouldn't therefore be putting through as high a cost as you previously would. So just be wary of that. But that's what we're saying. Here, you can see that definite split is the point. Example 2, Angela is a painter living in Oxford. She has a business client who lives in Edinburgh. She travels by train to Edinburgh to see the client, but stays on for a week for a holiday. Can she claim the cost of the travel to Edinburgh as a business expense? And this example, there is no separate identifiable business element. The train travel covers both a private function of getting to a holiday destination and also allowing her to see a client. But because there's no separation, she's not allowed to treat the travel cost as a business cost. However, note here, the separate cost of travelling perhaps from the train station to their home or to wherever you were meeting them, perhaps an office, that part could be claimed. But what we're saying, if she was going on holiday, she would have incurred that cost anyway. She needs to get to a holiday destination anyway. So it would be wrong then for we couldn't separate it out. So that's just a good example there of that duality of purpose. This bit then, I bought some new clothes here for work. So some just typical questions that we're going to see here. So I'll run through these. Hopefully you might sort of think, oh, actually, I've thought that before in the past, and it will be useful to you. So I bought some new clothes for work. Can I put this cost through my account? So the general rule would be clothing, you know, it's common decency. Everybody needs to wear clothes. We're required to wear clothes. That you wouldn't think, therefore, that you can claim clothing as an expense. So the general rule for clothing is that as a self-employed person cannot claim a deduction for the cost of a wardrobe of every day. However, the cost of clothing acquired for a film, and I did mention this earlier about maybe if you were an audition, a stage or a TV performance is allowable because that clothing is then not full regarded as your everyday wardrobe. It's then classed as costume. The cost of the costume and grooming, such as hair and makeup incurred by a performer making personal appearances, the sole purpose of which is to promote their business activities, is also allowable. Okay, so that's talking about the grooming side of it, about your hair and your makeup again. So that part is there. The sole purpose is to promote it in keeping with this particular audition, as we talked about there, film, that would be allowable. If you normally wear glasses, but for performances you had to purchase contact lenses as that particular character you were playing did not wear glasses, then such expenses should be deductible. Okay, so it's using your common sense here. If you wear glasses anyway, you know that's just an cost you should incur, regardless if you were self-employed or not. I've recently had cosmetic surgery. Can I include these costs in my accounts? Normally, we would say no. Okay, so the answer here is probably no. Only exception in exceptional circumstances will non-health related operations to change personal appearance by reversing or masking the aging process not have a private purpose. So, you know, if you're going for an audition and you're thinking, I want my teeth whitened because it's going to help me potentially get this role, you are benefiting from your teeth whitening for the duration, you know, for you as well. So that's where it becomes more tricky, and it's a difficult one, really. If the purpose of change your appearance was a private wish to improve or change your appearance, then no, as I say, the deduction will be due. No deduction will be due. However, some performers are able to show that the expenditure has been incurred solely for professional purposes. We've had examples of this. We've had somebody whose actual agent had said to them, you need to get your teeth straightened, and that's going to improve your chances significantly. And he was quite happy with his teeth. He didn't feel there was any particular need. So that's when it gets complicated, because ultimately, if he is improving his teeth, that is going to last the rest of his life. But it's not something he particularly wanted to do. His agent had advised him, or kind of told him, really. So this is when it does get more difficult. And it's always good to probably, if there's something like that you're going to incur, to get a bit more professional advice in your personal circumstances. It can be, it depends on the circumstances and the individual, really. It just says there, one example is a radio performer who started to do TV work. She is advised that her irregular teeth are holding her back in TV work, so she's cosmetic surgery to correct this. It was established with HMRC that she was previously satisfied with her appearance, as I said, and the TV work was the sole reason for the dentistry, and therefore they allowed the cost. So you just got to be careful, I suppose, and think about that in a bit more detail. Okay, motor and travel then, and then I'm talking a bit about use of home, and then I'm going to open it up to some questions, because I'm just wary of the time now. So motor and travel then, difficult one here again. HMRC do set out quite strict guidelines when it comes to claiming motor and your travel costs. Examples of costs that can be claimed are below. So typical motor costs that you would see going through would be your motor insurance, your repairs and servicing, fuel, motor hire charges, and the breakdown cover. So those are costs that we would typically see. You might have the duality of purpose kicking in here, quite common that we would have to apply a private use proportion if we were preparing this tax return here. If you are paying insurance and use your car, both personal and business, then we would need to get that identify which part of it is wholly and exclusive for business and which part is business. So it's a bit more of a complex area. So just remembering that rule. So you can claim some of those motor costs through, and those are also typical examples of travel costs that we would see going through as well. So your train, your bus, if you're traveling by bus, so to your public transport costs to get anywhere that we would see, perhaps flights and taxi fares, they're typical travel costs. So you can go through the option where you can put your vehicle through and claim what we call capital allowances. And I'm not going to go into too much detail about capital allowances because it's quite a complex thing. But basically, what is a capital allowance? So you can claim capital allowances on vehicles you buy and use in your business. This means you can deduct part of the value of that vehicle from your profits before you pay tax. And the percentage you deduct depends on the vehicle. So this is more complex. It all depends on the CO2 emissions. But we do that using writing down allowances to work out how much you can claim each year. So we put that cost through and we dribble a little bit of that cost through a period of time within the accounts. If you do that, then that's when we would start seeing your costs for your fuel and your motor insurance and your repairs going through of that business element. You might choose, and this is an option, to not do that and just do the simplified method, which is the mileage claim. So what you could do instead of doing that and putting through some of the business cost each year, some of the vehicle cost each year and some of those motor costs each year, you could just put through a mileage claim instead. And that the purpose of this mileage claim is to cover your motor costs. So for business mileage, you could claim 45 pence for the first 10,000 miles, and then after that 25 pence. So that's the simplified method where you just claim for your mileage. Really important to point out, if you do choose to do the mileage option instead, you must keep a business mileage log. Okay, really important. You're required to do that. So keep a log of where you are going back and forth. It's also worth remembering you cannot claim, obviously, for your personal journeys, including commuting to home or one particular, your main base of work. So if you go to one particular place is your main base, you can't claim for that place, but going to there. But you could claim if you go and visit, or you're going for auditions, or if you're going to see your agent, or you're going for a meeting. Those are those when you can claim your mileage. So, but if it's a one particular place of work, you cannot. It is more complex. We're always here for you. If you've got any more questions regarding this, it is a bit more of a complex issue, really. It just says there at the bottom, whichever route of motor cost that you decide to claim, other travel costs are not affected. So whether you put your car through and claim some proportion of those costs, or whether you just actually say, well, I'm just going to do a log of my mileage and claim the 45 pence up to the first 10,000 miles, then you could still put through those costs. If you then decide, actually, I'm not going to drive to London, I'm going to get the train, it's much easier, that's fine, that can go through as a separate expense. I've just I wrote here on my notes, obviously, you know, lots of people now are using bikes and being a little bit more self-conscious of fitness. So, you know, if you can actually do mileage for a bike as well. If you use your bike to go to, as I say, auditions or wherever, perhaps you live in London and that you don't have a car, and actually your bike's your form of transport, and you know you've got a bike that you use, then you can claim 20, you can claim 20 pence a mile, or you can do the opposite, where we're putting through the cost of the bike, and therefore then you don't claim the 20 pence per mile, but you can claim a proportion of some of those costs incurred, repairs, insurance, that sort of thing. Okay, I'm going to go on to use of home as office. Your home may have a dual purpose if you carry out some of all of your trade at home. So I talked about this again before. Someone may choose to rent out a purpose-built office, and they therefore have got this potentially, let's say, £500 rent a month going through that they can claim. You don't do that, you're using your home. So what is being HMRC allow is a cost for you using your home as your office. Okay, your home, as I say, is dual purpose. You are entitled to claim a proportion of your household expenses. Now, this household expenses, I'm talking about your rent, your mortgage, your utility bills, things like your telephone and internet. We can claim separately as an expense and claim that business proportion for. So this is talking about the bills that you have for being at home. So many of the bills for household expenses cover both trade and private. So, for example, a self-employed person who uses electricity both privately and for the trade will normally only get one electricity bill. A single bill does not mean that the whole of the expenditure is allowed. The part of the cost associated to trade use is allowable. This is when it gets tricky, when I talked about earlier. Sorry, all this talking. I talked about earlier, how do we pull out that part of the bill that's the business bit? So they've got some examples here to help with that. Angela writes up her trade records at home. She uses a room solely for trade use for a short period each week. She estimates that £104 covers the cost of the proportion of the establishment cost, plus the electricity for heating and lighting. Although the claim for £104 is obviously an estimate of £2 per week, the claim is small and reflects the fact of the case. It is a reasonable estimate of the expenses incurred here. So we're just using common sense when you're doing that. working out how much you can claim. HMRC do have a great tool on their website for this. I say great, it's actually a bit complex, but do have a look at it. You can start putting figures in there and it will generate out to you how much you need to put in, how many hours, and you need to put how many rooms are in your house, and it sort of works out and will give you some sort of guidance. So do have a look at that if you need a little bit more clarity. Another couple of examples here. I'll quickly run through so that we can open up for some questions. So example 2, Bill runs a small business who uses one small room at home as an office, exclusively for the purposes of his trade. The room represents 5% of the floor area of the house. His council tax, insurance and mortgage interest bills total £4,500. He claims 5%, 225. His electricity bill for the heating and lighting is £300. He claims £15, which is 5% again of the total. His total claim is £240. Although Bill has apportioned his electricity bill by floor area rather than usage, the amount he's claimed is small, and there's nothing to suggest that his business use is significantly greater or lesser than his private use. So that isn't a huge amount, £15 to put through, but actually it's a fair representation of his overall bill of actually how much he can claim for use of home. Last example, so Bert runs a small business. He uses a spare bedroom at home as his office, except for a week at Easter and a week at Christmas. All he does is write up his records once a week. The house, Bert's obviously quite well off, has 10 rooms. Bert calculates that his trade expenses based on 1/10 of the total would be £450. Bert recognises that this is far too much for what he actually does at home. So Bert estimates that £104 covers the cost of the proportion of the establishment costs plus the electricity for heating and lighting. Although the claim for 104 is obviously an estimate of £2 per week, the claim is small and reflects the fact of the case. It is a reasonable estimate of the expense incurred. So it's again looking at what is reasonable when it comes to this. For what Bert does, although he's doing it from home and he lives in a big house with lots of rooms, he could also do what he does in a much smaller house. He could probably do it in a 1-bedroom flat. So it shouldn't therefore make, that's when the reasonable part kicks in, I suppose. You need to look at that and say, well, I could do this in a much smaller house where the bills would be less and therefore I'd only claim some. So it's looking at it in a bit more detail, but do have a look at HMRC for some more guidance on that. I think, oh my God, I've talked to death. Hopefully, I'll go to questions now, but hopefully that's given you some sort of insight into what it means to be self-employed. I'll see if James, let's close this, stop sharing, if James is back. No. No, it's not back. Oh, right, let's have a look at these questions then. So we've got quite a few that have come through. So Tara, hi, what if you are out of the UK for part of the tax year? For example, April to July 19 and have no wage slips, etc. How do you deal with that on a tax return? Well, if you're out of the UK and you are not earning, then you're not going to be putting any of that on the tax return. We have a lot of clients as well that work abroad, and then we look at the residency rules. So that is a little bit more complex. So if that's the case and you're working abroad and earning money and you're outside the country and you're asking what the requirements are in terms of a tax return, that's a little bit more detailed and specific to your case, really. So it might be worth an email to me. I think I was on one of the last slides actually, but we can get an email address for you to send that to. Let's have a look. A few. Okay, if you have paid tax via Azhar, this is, I hope I've pronounced your name right. If you have paid tax via PAYE, are you taxed again on this income? No, is the answer there. We include your PAYE because we need to, or you will need to, when you prepare your tax return, see a summary of all of your income. And Azhar, do tune into our next session in a couple of weeks, because that will actually show how we work it out on a tax return. You'll physically see the calculations there, and you will see how we put that income in. But if you've already paid tax on that PAYE income, we show that and we deduct that. So if we work out you owe £1,000 of tax overall, but you've already paid 700 of it through your PAYE, then you won't need to pay that. We deduct that 700 and you just pay the difference. So hopefully that answered your question. But yeah, tune into that next one. I think you will find that quite useful, really. Let's have a look. I think there's a few. Jasmine, hi Jasmine, hi, great talk, thank you. It's really difficult doing these talks. A lot of the ones that we do used to be all face to face, so me and Alex would travel and meet people, and it's so much easier being in a room with people and you can sort of get a vibe. So it is difficult actually doing them through a webinar, and I'm just sitting in a room now on my own talking to a laptop, so thank you for that. You've asked me, Jasmine, would you put things like haircuts and beauty treatments, waxing in the same category when organising expenses? So yeah, is the answer to that. So any costs like that, your hair, your beauty, you can pop them into the same category, yes, and we can put those within the same one on your tax return. Jasmine's also asked, do you know of any good apps to store receipts? As I find apps like QuickBooks don't have the abnormal performance example categories. Yeah, you're right there, Jasmine. As I say, and that's what makes Theataccounts a bit different, really, is that we realise that there's going to be separate expenses for beauty and that sort of thing. And QuickBooks is set up or designed initially with those expenses in typical categories, so you probably won't have that. You should be able to, through QuickBooks, adjust that. I know, you know, desktop ones you can. I'd try the app, but you should be able to amend those categories within QuickBooks to make them more basically tailored to the entertainment industry. Let's have a look here. Okay, so I've got Tara. I think Tara's got a couple through. Yeah, I've already answered one, but let's have a look what Tara's put. So, hi Tara. If you're half PAYE, half self-employed generally, do you claim all expenses or have to justify that only for self-employed side? For example, only train tickets in days for the self-employed gigs. Yeah, so the answer to that is we are only putting expenses through that are wholly and exclusively for your business use. So on those days you're traveling to a gig, that's when we should be putting through expenses for you traveling there, and they should match up and only be in keeping with your actual business expenses. Let's have okay, Jasmine's also put, I was working for a cruise line October to March. I've been told by friends that I don't have to pay tax. However, I believe otherwise. please can you give me some clarity on this? Thanks. We've got lots and lots of clients that are on cruise ships, and you will have probably heard, if you work on a cruise ship or you know of a friend that works on a cruise ship, that they probably say they don't pay any tax. And that is the reason for that is there is something called seafarers tax relief, which is actually quite a complex relief with quite specific criteria in order to claim it. If you do qualify for it, and it is specific, there's very certain dates that you've got to adhere to being out of the country. It's to do with your contract whilst on the cruise ship. We've got Dan here at Theataccounts, who's our seafarers expert. He's fab. And yeah, you need to be able to tick those boxes. And if you do, that's correct. You do not then pay tax, is the answer to your question. But you might not, and therefore you might be required. So you still need to do a tax return. Yvonne's just put, thank you for this session. You're welcome. I hope it was useful. Jasmine, thank you for answering those questions, Natalie. I think I outdid myself on questions. No, it's fine. It's lovely to have questions, to be honest. And just to give you some clarity, that's the purpose of this. This is, you know, I'm going to go home, finish this, and think, yeah, you know, I've done my job right. And that's what I want to do, really, is to make sure you have some good understanding here of tax, and hopefully that you don't find it as scary as you did, because it doesn't need to be. There's lots of support out there, you know, accountants, and even if you don't choose to use an accountant because of the cost and implement side of it, then, you know, hopefully these sessions, and as I say, the next one we're going to do will be really good, because we do look at the figures then and have a look at those numbers. That was going to be useful for you to really think, well, okay, this is my level. I've done the bit now, I've prepared it, I've worked out my expenses and all of that part, but actually what I'm going to have to pay now. And you're going to have to pay your tax. You're going to have to pay as a self-employed individual. You're going to have to pay class 2 and class 4 national insurance, and that's another minefield. So do tune in for that one. So I'm glad that you've learned a lot. Thank you so much for your time, and I look forward to your time.
Hi, that was amazing.
Oh, thank you.
What a fantastic.
I can talk, can't I? I've drank all my coffee. I could have done with a couple of coffees lined up.
That was really great. I mean, that's a great starting point. I can already see all the comments and everything. Just, you know, it's so important. And as you said right at the beginning, the importance is, even if you have an accountant, which you all no doubt will at some stage, you know, you'll go, oh, right, okay, it's time to move on to an accountant. And that actually happens quicker than people think, isn't it? That you go from, I'll do it myself, to the accountant thing, because once you start getting more and more of those receipts where you're just like, can I claim this? Can I? It is just easier to go, there you go. Can I just give? But like you said at the top, you'll send that, and you still have to be able to check it and know that everything is right, because
that's right. Yeah.
You're the business owner.
Yeah, that's right. Even if you do appoint an accountant, we pass it to you at the end and say, right, you need to confirm this is right. So to have a good understanding of what all of those figures are is always going to help you throughout your self-employed journey. Even if you do use an accountant, to have a good understanding is only going to help you. Fantastic.
Oh, Natalie, thank you so much. Can't wait for you to do the next session. So
yeah, brilliant.
I'll let you go and get some cooler air now.
I need another coffee. That's what I need.
Oh, brilliant. Natalie, thank you so much.
No, pleasure. Thank you ever so much, James.
Bye-bye. Well, that was a good starting point. I think I can see by the comments that you were gripped by that. And it is so important that you have an understanding of these things, even if you have an accountant. So if you are interested in taking on an accountant and you love Natalie, obviously you will love Natalie, please go find her beautiful picture on our faculty page, and you can then contact Theatre Accountants through there. All the details are there, but they're on all social media as well, so make the most of that. If you're looking for an accountant, it's a pretty good place to start, I'd say. Wonderful. Coming up next, we have the awesome, we've got Jamie Armitage. Jamie Armitage will be doing a session preparing a scene for audition technique, and he'll be with the wonderful B again. Jamie Armitage is co-director of the musical Six, amongst other things. So he'll tell you all about everything else that he is involved with. So that is at 12:30. So we will see you then. Thank you so much for joining us for this session, and we'll see you a little bit later.